What's good? It's your boy, Mr. Rush Shoot, aka your favorite investor, man. Listen, if y'all can't already tell, I'm not at my usual desk setup, so bear with me as I give y'all this information, man. I know there's a little bit of background noise. I'm out visiting some family, but we do have some things to talk about, man. I told y'all a few weeks that it was time to sell on SPY. But I told y'all we had those rejection candles, right? Y'all can see them. And basically, we ended up getting followed up by that huge bearish engulfing candle. So before we get into this video, I'm going to show y'all what happened on this calendar, who came out and spoke, because we had some very interesting things that were spoken on this week. And markets completely flipped and gave us the bounce that we were talking about. So we're going to go through and review all of that. But real quick, let's run the intro. I'm going to see y'all when y'all get back. All right, now before we get into the video, man, be sure to hit that like button and subscribe so you don't miss any of the future content. So you guys are always posted on these predictions weekly, man. I told you I'm coming with these predictions every single week. I don't want to miss these. So make sure y'all hit that sub button, smash the like button, man, so this channel can grow and we can start building our community. You feel me? As always, though, be sure to not use this as advice, as financial advice. Should you need financial advice, please seek a financial advisor. And remember that all of the information given on this video are for entertainment purposes only. So, like I said, man, well, let's go back to last week's close. And I told you guys we got this huge bearish engulfing candle. I'm going to actually move over into the daily chart so you guys can see that. And basically, we ended up closing somewhere around here on Friday. We ended up getting a little mini bounce. And we were saying, hey, we're looking for either 388 to be that support area. We ended up dropping all the way down to about 392 on this day. You guys can see that we actually opened and before, like, below this last candle, but we ended up closing in like completely disregarding all of that. So what ended up happening, right? I told you guys that we weren't really going to have any like market shaking data last week. We weren't really, expecting any data that was going to prove to be basically just changing the narrative, right? We already knew that inflation is going up and sticking around. We still got hot jobs market, all of the good stuff that comes with the fact that we should still be seeing the Fed be looking to increase rates or sustain rates where they're at, right? Nothing to really say, hey, we're in an environment where things might start to change. But then a very funny thing happened on Wednesday, right? So when you look at this daily chart, all right, and you guys see that we basically were, for all intents and purposes, we probably should have ended up closing below 392 and worked our way to 388. Somewhere around midday, Fed Bostic wanted to come out and say that right now, right, and these are his words, right now, he is still in very firmly moving in a quarter point. He also said that his preferred course of action is slow and steady. Now, when he came out and said that they would potentially move the interest rates just a quarter point, this completely sent the markets, right? This happened around noon. It was a pretty slow day trading. He came out and said that, and all of a sudden the markets just completely changed. So that huge momentum shift, it followed up into Thursday, into Friday, and the market just ate it up. The market literally just ate it up. So right now, we were expecting a bounce around 388. We ended up getting it at 392. We're probably going to end up probably closing this gap in between 408, 407. I would say tops, we're looking at about getting back up to about 411. But what I'm trying to let you guys know is that the market wants to trap you, right? So be careful. Don't get suckered into this rally and thinking that we're going to end up breaking where we broke somewhere around 416. Don't go into the markets thinking that, hey, there's hope that we break through 416 and start this next bull rally. There will be time for you guys to get other entries. What I'm trying to tell you guys is don't put all your eggs in one basket. Don't go in on this rally all in, because what's going to be left behind is pure carnage, right? So don't get trapped by this market, and make sure you guys are taking the trades accordingly to your trading plans, and making sure that you're not putting yourselves in a situation where you guys can come out of this market hurt. So again, this completely changes sentiments of other markets, but it leaves us in a very curious situation, because I was thinking coming into this week, this is the week that we should have some data that will end up either continuing the narrative or changing the narrative, right? That's all this market is about, is making sure that you're paying attention to the macro so you don't get caught with your pants down, man. That's not what you want to do. So he came out and said those comments. Now this week, when we look at the economic calendar, even though the narrative hasn't changed, we are now looking to see, okay, well, what is the data going to tell us, right? So on Monday, we have factory orders, which, I don't think is going to change too much. It might let us get a little bit of insight as to which way the band is going. Then we have Fed Chairman Powell talking on Tuesday. He's testifying to the Senate. We also have the consumer credit coming out on Tuesday as well. So that's something that we do want to pay attention to. where the median forecast is now 25 billion and our previous forecast was 11.6. So obviously we do know that consumers have been putting a lot more stuff on their credit cards, which should end up leading to lower demand as more people want to stop using their credit cards or they can't use their credit cards because they're literally tapped out. Then on Wednesday, we have ADP unemployment, we have the trade balance, and we have the job openings, right? We have JOLTS, man. This is going to be one of the biggest keys that comes out at 10 a.m. So make sure you're paying attention. Once this drops, this is going to be huge. If the job market is still running in hot, this is the market will probably not like this. So what does this tell us, right? Going into Monday, we'll probably have around Monday or Tuesday where the market is still kind of calm, or where you can still, if you're playing things to the upside, you still have some room. But come Wednesday, make sure that you are either buttoned up or in a position to either take the opposite, or you've got some cash sitting on the sides if you need to average down or whatever it is that you need to do to manage your trades. Thursday we got Fed Governor Waller speaking, and on Friday we have the unemployment report, which is another key data that we want to see that's going to tie into what's going on in the jobs market, right? I just need you guys to understand the Fed wants to slow down demand. By doing this, you need the job market to slow down as well, right? You can't have a hot jobs market and slow down demand. The two just don't work. That means that people still have money to go spend. And if people still have money to go spend, then they can't come back and then the demand's not going to decrease. You know what I'm saying? So that's what we got here, man. Like I said, still some bullishness on the table for the overall market, but we are waiting for this data. So this should be a very interesting week. Now, y'all know me, man. Just because we're looking at this market here, right? We're looking at the overall market doesn't mean that there's plays to be made elsewhere, man. I've been telling you guys for the last couple of weeks, healthcare, staples, and energy are literally my keys, right? I love these sectors right now. I'm still playing things very defensively, and the charts are telling me that I need to be playing them defensively, right? So when we look at XLE, right, we go over to the energy section. That's the daily chart, but I'd like to start things off on the weekly. Y'all see we got the rejection candle here, and we got another bullish engulfing candle to the upside, man. And this is coming off of, I'm gonna show you guys really quick. The reason that I like this, we got some support at 78. We've also got a key section that we hit somewhere around 82. You guys can see we kind of bounced off of that level before here. We also bounced off that level here. So I'm looking for that to become support. And this has been showing me that. So when we look into the daily, I told you guys last week, we should easily fill this gap over to 82.68, right? I'm sorry, 87.68, which we basically did. We basically got close to this. So we did end up filling that gap. I'm still looking for energy to continue running up into the 90s. So I'm still very bullish on XLE. If it does end up breaking that 90, we might end up running into new all-time high on this sector. So just make sure you pay attention to this. Is one of the laggards this year. It's definitely been moving a lot slower than either SPY or the NASDAQ. So it's definitely an area where there are some gains to be made. Moving on, we've got XLB, which is consumer staples. I'm sorry, not XLP, right? So we've got XLP. This is another place where I was looking to see if I was in the right spot. Remember, I was saying that I think I kind of joined in the middle of this trend, and it's kind of like around here. I do believe that there is some support there, but I kind of really wish I would have been waiting and been a little bit more patient to get it at around 69. I do believe that is where support is. But one of the interesting things that we got was this huge rejection candle to the bottom. And when you look at that on the daily, you can see how the consumer staples just completely flipped. We ended up getting the rejection here and a nice bullish engulfing candle to the upside. So I am looking for this to end up running into the $77 price range. So I am looking for some stocks in this sector to bounce and continue to have a good week. And then we've got healthcare, right? Healthcare has been giving me a little trouble, but I do like the sector. And I actually like how much it's been coming down, because I know that this is a sector that usually when things turn bearish, people end up running to this sector. And it's one of the ways that they responded in 2022 when things were going down. You saw there was a lot of movement into healthcare, and we saw that huge run up. So as we're looking at XLV, I told you guys this has been giving me some trouble in the past few weeks, but I do like the way that it closed this week. Huge rejection candle to the downside. It was basically what I was looking for, right? We ended up getting all of these rejections. The difference is that we ended up getting into, a spot where I do believe that there was some support. 125, 126 was a spot that I felt that we do have a lot of support in, a lot of buyers, and I do expect the market, or I do expect the healthcare sector to bounce from here, right? I do expect this to be a nice little bounce zone to get us back into the 136 area. So XLV definitely on my radar. Another thing that I really do like is XBI, right? XBI is the biotech sector. I don't know if I really want to get into this yet, but I have been seeing a lot of biotech start running a lot of 100%ers, 100% gainers, 150% gainers, a lot of good earnings in the sector, and just a lot of news that I've been hearing. So it's definitely a sector that I want to play in. You guys can see it's kind of in a nice little area where it's kind of been consolidating between 76 and 90, 91. So this may be an area where you start to recoup some buyers and finish the distribution phase of this chart and end up start moving back into the hundreds, 120s. So definitely something to pay attention to. Another sector that I will be looking at is crude. I didn't play crude this week, but it actually ended up having a huge week, and it's been on the cusp of moving. So definitely something to pay attention to. The weekly chart looks terrible, but when you go into the daily, you guys can see that there is some money to be made here. Basically, we ended up getting a nice little bounce off of the support here at around $25, and it shot up to about 29. Now, this move's super crazy, so make sure that if you are going to play this, I would take small shares. I wouldn't necessarily go all in on crude, but crude is definitely looking a little bullish at the moment, so make sure you guys are paying attention to that as long as the energy sector. So, anyways, man, that's all I have for y'all today, so make sure you guys check back with me next week. Be sure to hit the like button, subscribe, and if you're rocking with me and the content, you know what I'm saying, let me know that down in the comments, man, if some of y'all please. So, anyways, I'm looking forward to another exciting week in the market. But as always, this is your boy, Mr. World Shoes. Don't do anything I want to do. I'll catch you on the next one. And remember to always protect the capital, man. Peace.